but the recent volatility and the changes that you see between super volatile conditions and then it gets quiet and then just something happens and it's really volatile again. This is an indication of the underlying instability of the structure of the market. So it's not that, what was it last time, some advisor resigned from the White House. That's not the reason the market went crazy. The reason the market went crazy is that the underlying structure is unstable. So this is called the sandpile effect, where if you take a grain of sand and you drop it one by one in the same spot, eventually a pile is created. You keep dropping grains of sand, dropping grains of sand. Eventually, one of them will drop, and the entire pile will just collapse. It wasn't that last grain of sand that you dropped that caused the collapse. That was just the catalyst. It was the underlying instability of that pile that is the cause of the collapse. And this is kind of what we're seeing in the markets right now, I think, is that there's been this incredible run-up for a long time on basically artificially inflated, and now you're starting to see that underlying structure start to break down. It's just my opinion, and it's interesting because as a day trader in the futures market, I don't care if the market goes up or down. The volatility is something though that we got to deal with, because when it gets really volatile, we have to make adjustments to deal with that. Typically speaking, when it gets really volatile, I just don't trade, because you can't handle it as a smaller account trader. And in fact, you could look at it in another way, in that one of the reasons it's volatile is that the larger players step aside. The liquidity dries up. And the reason they're stepping aside is that things are less predictable. Okay, so that should tell you something about should you be trading or not. So I'm looking at like this, machine learning based automated trading system in these conditions, and I'm basically flat in the NASDAQ after 9 trading days, and I'm really actually pleased that I'm not just getting destroyed in these conditions. So something to think about. Okay, so filled in the NASDAQ short, 201, that's a turn short. Tough trade to take yourself because the market's been kind of climbing straight up. A much quieter looking day than we've seen. There's news in 14 minutes here. The overnight range was 30-something points instead of 60 or 100, which is what we've been seeing. No, nothing. We're still looking for. Yeah, we're right there. Went to scratch, and then the ES placed, and I can't hear my sounds for some reason. ES order placed at 27.62 short. So we give it 2 bars now to go back and get that. And so what'll happen is if the current bar closes down, then it won't reach it in time. This bar has to close up, and then you could still get up and get it. So we missed that one. It'll cancel automatically here. It'll be a good test for that. And NASDAQ is trailing now, so we hit 20 ticks. It's just a hard target of 30 ticks. So that's something else that you as a user got to decide what you want to do. So the ES order canceled automatically like we expect. That's good. One of the things I saw just here over the last just about 2 weeks now is that we're often finding really good entries and getting out way too soon. So it kind of depends on your trail methods, your trade management approaches to whether or not what your overall profitability is. Okay, so I hit hard target of 30. Let's see if that's a good exit or not. A good example of a difficult trade to take as a human, because look, you're just basically going straight up here. So let's review these codes here. Here, clearly sideways, don't do anything. These are all 287, 297, 287. They're all super aggressive projections of failure, failing to continue. But they're so aggressive, we're not taking them. All right, the current environment is too volatile to try to take that trade. Then we get 201, turn, signal short, and the system places an order. Be very hard for a human to take that trade. All right, and then you actually get a couple more here. So there's a cluster right there of codes that are saying short, short, short. So as that worked out well. Let's see what happens next. Basically scratch Sean until we're up now. Through yesterday I was scratch in these fairly volatile conditions. I was chatting about that earlier, maybe before you joined, that in the NASDAQ what I'm seeing is that wow, look at this really violent reversal in the ES here. In the NASDAQ, what I'm seeing is, we're getting reasonable days and then nice small loss days. Reasonable day, nice small loss day. The current volatility, it's only worth doing because you'll get those days that are just spectacular out-of-body experience days. Otherwise, you're better off when it gets really volatile to just not trade. As a human, I don't. Right, I don't trade when it gets too volatile. So I'm really actually pleased with how well the system is doing in conditions that would normally destroy a small account trader. The other thing to consider is that my exits are not the best. I'm just taking 30 ticks, so. Exiting is almost a black art, so it kind of depends a little bit on you. But we're getting very, very clearly getting really good entries. If you look at the current entry, this spectacular short entry up here, and it's quite possible I exited way too soon. We'll see. So, it is what it is. Trading is what it is. 2 weeks is it's a reasonable amount of time to get an idea of how things are going, but you can't draw a conclusion. Just like you wouldn't draw a conclusion about your baseball team over the stretch of 6 games. So the question is, does the auto trading stop automatically during news? In the study, you can tell it what time ranges. So this is currently set 6:35 to 9 o'clock, but you can add a comma and go whatever you want. So you could go 6:35 to 6:55, something like this, and then 7:05 to 9. It would be like this. Like that. Okay, you could do that. I'll just cancel here. There are some caveats associated with that. We'll talk about it at Saturday's tutorial. There's some things you need to be aware of when you do that. So the rational trader as a service was built to help people deal with the fact that you've got a physiological response to risk, and you've got to deal with that if you're going to be a trader. And the question I would get asked was, okay, so there's a failed turn long in the NASDAQ, and so I would get asked, well, what about automated trading? Because that's a way the way to avoid all that is just have the system do it for you. And at the time, my answer was always, well, you just can't. The systems aren't good enough. But I believe now that with the machine learning techniques that they're acceptable. They're good enough now to do it, and we're doing it live now. This looks like we're going to get tagged here. We'll see.
Order filled.
Okay, so stop there. No signal in the ES. All right, so here we are at the end of the day, and let's see. So we've got plus 65 in the NASDAQ, and the SIM in the ES is down a half a point. So let's take a look at the NASDAQ here. This is quadruple witching day, traditionally a day that's pretty choppy and you often just want to stay away from. Let's see, so we caught the down move here, which we recorded live. And then let's see what else here. Nothing. Okay, this turn is predicted to fail, which is just wrong, right? So we get crushed there. And there's a short here, but we don't get filled. Okay, that would have scratched or made, for those of you that were taking different trail management, that gets about 19 ticks. And that music's probably too loud. Hold on. All right, so then we get down to here and things are a little noisy, so we don't do anything. There's that 101 again, okay? So 274 is just underneath it. That's too aggressive. That's the super aggressive pullback short. Then you get 101. That's the noisier of the turns. You can see that would be at least a scratch trade. The entry would be 70.75. So again, it's depending upon how you're trading. The 202 this is a nice signal here. Okay, that's short. All right, so that it's seeing this turn. I like that. That's going to be tough to catch because it falls and doesn't come back, okay? In this case, that's looking sideways, I believe, and so there's no red arrow there because we're not taking that trade. So again, we're tuning that noise filter for the overall volatility. So that's something to keep in mind here as we proceed. 201 here, so a pullback, and it sees this little turning behavior, predicts short, so we like that. We're getting stopped out to the tick here, it looks like. So this is a little bit of a tragic stop here. So it's a nice entry here at 66 short. The trade management is getting me. All right, so there's a lot there to be had, both. So on that initial thrust to get your 30, and then, my normal trail method would be down here, and then I would be trailing subsequent contracts to there. Now that has a couple of extra impacts, okay, because we end up taking another trade here that gets stopped. So it's one of those cases where, because the trail is too aggressive, we take ourselves out of the trade and then put ourselves in a position where we take another trade that ends up losing money. So something to keep in mind. What we want to note here is that is a very, very nice signal to get in. Clean entry, just too aggressive on that trail management. Okay, and then nothing else. This is 9 o'clock here. So actually for a quadruple witching day, that's pretty good. I'm pretty pleased with that. Let's take a look at the ES, and then we'll kind of do a wrap up for the last couple of weeks here. Whoops, that's the wrong button. Let me pause for a second. All right, let's look at the ES now. And let's see. So what we get is a long here. Whoops, right there. Okay, with a pretty clean entry right there. So you get all this here. That's 10 ticks. My target is 12. So you end up giving back quite a bit there. And then pretty sideways after that. So we just kind of stay out of that mess. And then look at this just gorgeous signal short here. So very similar to the NASDAQ in that we're seeing this turn. Though this is a much this is a much uglier looking environment here. Pretty sideways and choppy. That little peak up here is enough. We roll back over, and the system predicts that short there on that turning behavior. We don't get filled, all right, because I'm placing my order right there, all right, and so I'm waiting to get filled and then don't get filled. So we actually get a second signal on this bar here, but we don't place that order because we already have an order in the market, and then it doesn't come back for us, so that order gets canceled. Very similar problem here as with the NASDAQ, in that we're correctly finding just the awesome entry here. All right, we got to get into the market, so we got to work out those issues here. They're a little bit different on the ES, and then but we end up taking a long down here that we wouldn't normally take if we were short. So something to think about in terms of how you manage your trade, and when you're trying to go for longer runs, you end up taking less trades, and what that means is you end up creating new risk for yourself less often. Okay, every time you take a trade, that's new risk. Now, these are really clean signals. I'm very pleased with what I'm seeing here. Okay, so the system's been live now for 2 weeks with the NASDAQ. That's trading a real money account. The ES here, just a few days or 2 days. All right, so we're still working out some things here on how to, what's the best way to enter, things like that. But in general, I'm really pleased with the ES. But a couple of days is not enough time to go, all right, let's switch to real money. The NASDAQ, after 2 weeks in some pretty odd conditions, I call it wacky. It's pretty volatile. It's so volatile that there are days where, as a human, I would not trade. And then we're getting some rather abrupt changes in volatility. So it'll be super volatile and then quiet, and then super volatile and then quiet. Very difficult to handle that as a human. The system is about at scratch. I think it's a little down. I didn't do the actual math. And even less so, even lower because of costs. The volatility means we're taking more trades. In general, I'm pretty pleased. If the system can do this well in these odd, strange, difficult conditions, then I'm really happy. The reason is that the volatility is opportunity. And so typically, as a human trader dealing with conditions that are this volatile, you just end up losing money. But the machine can clearly keep up, and so we just didn't get one of those days where the volatility, there was the opportunity to take advantage of that crazy volatility. So we'll see. I'm going to keep running it, even though the volatility is pretty high. Let's see. I think that's it for today. There is a tutorial and overview tomorrow for, it's open to the public, but it's mostly just for the people that are in the early adoption group. I'm planning on formally releasing the software to them. It'll be probably mid next week, maybe a little bit later. I've got some final testing to do this weekend, and then I want to burn that in live for a couple of days next week and then release that out. Okay, that is it for today. Take care.